Hello, this is the tradesight stocks and futures market preview for Friday, November 8th, 2013. Start with this was the day that Twitter came public. We were looking at a sell-off in the room early on is what we were predicting. Had a lot of trades that made us a lot of money today on Thursday the 7th. And we'll have a separate YouTube video recapping just the action of the market on the day that Twitter came public, just so we can sort of show you what it means to the market, what it meant today. Always have that available. So today, for this video, we're just going to talk about what the market looks like at the moment, what to expect moving forward as we head into Friday, where we've got a lot of key data, including the unemployment rate and non-farm payroll data for October. We just had an unemployment data last week that was from September that had been delayed with the government shutdown, so we're getting this data back-to-back fairly quickly. Wouldn't surprise me to get a little gap up, but here's a look at the S&P daily chart. You can see the big sell-off today, and I'll show you what that looked like intraday in a bit. But that is not a pretty chart. We've got a 9-bar setup and a static trend line that could be the target down here at 1660, which is almost 100 points lower. And if we get some sort of a little gap up and start to sell off, anything under about 1740 on the S&P is going to accelerate us to the downside. That's not the type of chart, as Rich said, not the chart that friends let friends hold long overnight, or especially over a weekend. Even worse, you look at the NASDAQ 100 with the secret count and the 13 sell signal from a couple of weeks ago. If you put the aggressive risk line on it, you can see we get a little more room, as Rich mentioned in the room today. Even with the other risk level, we never really broke it. Technically, it did close above it, but look at all those bars that were just dead flat. So in my mind, the seeker sell signal there has been in place. I've been commenting on that. The fact the NASDAQ side was not making new highs when the S&P was here. Let's look at the SOX index. Also showing signs of rolling over here, and also has that 13 sell signal in place. We're going to cover all this again over the weekend, so I'm just going to speed through it. Here's the biotechs that have been selling off here. Remember, they sold off in ahead of the potential government shutdown. Then they got a bounce. When that got resolved, we got a 9-bar setup to the upside, and now we've retraced back to the static trend line of that move. Nothing good about this, and remember, as go banks and biotech, so goes the market. Here's a look at Amazon. Rich was pointing out today. That's not a pretty chart in the short term anyways. Obviously, can't complain about a stock that's up as much as it is for the year, but not a pretty chart in general. Here's Netflix, also starting to roll over here today. Made some money short the Apple today, and that's right on support at that 510 level. If it loses that red static trend line should definitely be in play. Here's a look at Google, also starting to roll over. And Tesla, of course, after the news the other day, the gap down and break. So none of that's particularly pretty. Here is a look at, let's go to the S&P E-mini futures, and we'll look at it in 10-minute bars for the last, this is Thursday, Wednesday, Tuesday, Monday, and then Friday of last week. So we have a day finally here, and that's why we did so well, where we gapped up, and we literally encompassed and covered the range of the entire last week. Big range day. We made money in the futures, made money in Forex, made money in stocks. Real nice trading session in general. And again, this is not good. And anybody that thinks, oh, there's your sell-off, now we start looking for a bounce again. No. That's not how you go about looking at something like this. This is a significant first day down on volume, 2.2 billion NASDAQ shares during market hours. Any sort of acceleration to the downside tomorrow is going to let people go into a weekend not feeling particularly comfortable with what's going on out there in the market. So let's keep that in mind. There's nothing about that says get ready to buy. Let's take a look at what Twitter did today. Remember, priced at 26, which was above the original expectations of the offering. And unlike the Facebook IPO last year, which tanked under its IPO price, this one rallied, gapped up to 45 or so, rallied, and held that 45 area in general, tried to slip underneath it briefly. Couldn't, so they did a good job of holding it, but never a good sign when you really, it basically closed right where it opened, right? So you got this doji with all this volume and activity above it, closing near the low of the day in the opening price. It's not really a positive, but again, positive for the company to have come out at 26 and traded at this level. You remember, Facebook didn't close above its IPO price after the first day out, so that's definitely a positive sign. It probably bodes well for the market. And again, I'm going to do a whole video just on the Twitter offering, and maybe even a written article on it. So I'm not going to focus on it too much here. But in terms of trading in the short term for Twitter, there's nothing positive to look at here. In other words, I wouldn't be buying it at this price, wouldn't have bought it at any point today and held it for the future. It'll have some time to shake this out, and then we'll take a look at it. I'm sure it's a stock that we will be trading a lot down the road. So that's it. What do we get for tomorrow? A lot of data in the morning. Expectation of maybe a gap. Again, I think if that gap is up and you start to head down, be careful. This could be a big opportunity for another big down day. You don't just have a day like today, Thursday, and then nothing happens following it typically. I don't think the economic data that could come out, including the unemployment rate, the non-farm payroll data, could be positive enough to offset the sell-off that started here, especially because even though expectations are low with the government shutdown in terms of economic numbers last month, obviously we're not expecting any job growth due to the shutdown, very little anyways, but it's hard to imagine there'd be an upside surprise enough to shock the market and hold it or push it higher. So we'll be looking to play on the short side primarily tomorrow. Let's just hope we don't get a gap down on Friday. Everybody have a great week and weekend, and we will talk to you on Friday in the lab.